Hello everyone. Welcome to Chapter 1 of my private mentorship series. This chapter will focus on market profiles. Here, I'll ensure you gain a thorough understanding of everything related to market profiles and how they can transform your view of the markets. I've structured and arranged these chapters to build each aspect of your trading step by step, like constructing a solid foundation brick by brick. We'll begin with essential basics and foundational knowledge before progressing to the intermediate and advanced stages as we strengthen our core understanding. There are two primary ways to view the markets using market profiles. The first approach is a simpler one, taking into account only two profiles or aspects, making it a more basic way to analyze the markets. These two aspects are the consolidation or ranging profile and the expansion profile. Before advancing, let's delve into these profiles. For now, you've learned only this basic version of market profiles, and it's the one you're most familiar with. The market generally operates within a ranging profile or an expansion profile. We start with a ranging profile, and after it concludes, we transition to an expansion profile. Following an expansion profile, we don't proceed to another expansion immediately. Instead, we revert to a ranging profile before embarking on the next expansion phase. From this perspective alone, you can filter out roughly half of the market's conditions, which tend to have lower quality and probability. Your goal as a trader is to focus solely on the expansion profiles and avoid trading during ranging or consolidating market phases. This approach serves as an effective filter to avoid lower probability scenarios. A more advanced way of viewing markets with market profiles considers multiple aspects: a consolidation profile, an expansion profile, a retracement profile, and a reversal profile. Additionally, I've included another profile, which I'll explain later. First, let's go over the ones you're already familiar with, the ranging and expansion profiles, and add the retracement and reversal profiles. Let's review this on the charts. Each market move starts with a range. When price opens, whether for the week or day, it initiates a range. And after that, the only possible outcome is expansion. Following an expansion, three outcomes are possible: a retracement, a reversal, or another range. This expanded approach to market profiles provides a framework that helps traders focus on high probability conditions and avoid low probability scenarios. Each profile has its own set of probable outcomes after it concludes. For instance, after a consolidation or ranging profile, the next move is an expansion. We can't expect a retracement or reversal after a ranging profile. The only possible outcome is expansion. Similarly, once an expansion concludes, only three outcomes are possible: a retracement, reversal, or range. An immediate re-expansion is not feasible. First, we observe a retracement or range before positioning for the next expansion or reversal. Following a retracement, the only possible profiles that can form are an expansion or another range. Another retracement or reversal won't occur right afterward. Each profile filters market conditions further, allowing traders to avoid certain profiles that are less favorable. This filtering system is valuable as it helps focus on high-quality setups. As you know, 90% of trading is about waiting for the right setup, with the remainder dedicated to executing trades. By understanding market profiles, you gain an essential filter that can help you sidestep low-probability conditions. That's why the first topic in this training was market profiles, to ensure you can avoid lower probability conditions and focus on quality setups. We can enhance this knowledge by adding the manipulation profile. This profile helps traders identify situations where the market takes liquidity on both sides of the range, misleading traders before reversing in the opposite direction and expanding. Understanding manipulation profiles can prevent traders from getting trapped in moves some call a Judah swing. While it's possible to trade the Judah swing, measuring its extent is challenging because the manipulation can vary in size, making stop-loss placement uncertain. A practical solution is to wait for the manipulation profile to end before entering an expansion profile, using a confirmation such as a swing high or low breach or an order block formation. Once this confirmation occurs, you can enter with confidence as the manipulation phase ends and the expansion phase begins. Now, as I said before, each market profile can have a particular possible outcome. Similarly, a manipulation profile also has one possible outcome, which is an expansion in the opposite direction, right? A manipulation profile cannot enter a retracement, changing profile, or reversal profile. It can only lead to an expansion afterward. This adds another filter to our understanding of market dynamics. Another important aspect of market profiles is that generally you would want to avoid ranging, retracement, and manipulation profiles and focus only on the expansion and reversal profiles. These are the only two profiles that, ideally, most of you, if not all, should concentrate on while avoiding the rest. Advanced traders may trade the manipulation profile too, but for now, and for our improvement, we'll focus solely on expansions and reversals. As I mentioned earlier, this forms the basic and fundamental aspects of our market understanding and dynamics. Moving forward, we will integrate this concept with others, such as CRT, turtle soup, key levels, and PDS, to build further insights and progress together in this coaching program. We'll apply this knowledge conceptually and contextually, meaning we'll analyze past price action to anticipate future movements. For this, we'll use conceptual and logical technical knowledge in a contextual framework, which will guide us in strengthening our understanding.